This is Jim Juback, and welcome to Juback Asset Management YouTube video for Wednesday, April 2, otherwise known as Liberation Day. I'm here in Venice, where we're getting already ready for the Jeff Bezos wedding in June. The city is basically, blasé on one hand. On a second hand, not really looking forward to how all these people coming, because Venice already has a, what should we say, over-touristed problem. And third hand, 1, 2, 3, really looking forward to all the money that the Bezos party will bring in. They've apparently already booked 5 hotels. So we're not going to be here because Jeff didn't clear the dates with us ahead of time. So we're going to be in Bologna at the Restoration Film Festival with our son when the Bezos wedding circus happens here. So we'll have to look at the tape. If you like this video, please go to my YouTube channel and subscribe and give it a thumbs up. If you subscribe, which is free, you get notification when we do our next ones. We're trying to do about 3 a week, but I'm not doing a good job at doing it every week. So it might be worthwhile subscribing so that you get notification of the currently sort of erratic schedule. Second is if you like more free stuff, you can go to my jubackpicks.com site, which has got 3 portfolios for 12 to 18 months, 5 years, and dividends. And that's free, as well as 1 or 2 posts a day. You can go to my paid site, which has 2, 3, 4 posts a day, and those 3 portfolios plus 3 more, 1 on volatility, really important right now because the market is volatile. 1 for ETFs, where it's been tough to find good diversification, but I'm trying. We just added a China fund, and I think we're going, and on Monday, a couple of days ago, we switched from a dollar ETF to a yen ETF. The dollar has not been behaving as it's supposed to in this environment. It's supposed to be going up, even though dollars is supposed to be a safe haven from chaos. It's supposed to go up even when the chaos is being created by the United States. And the last one is a really long-term portfolio, which right now shows a lot of red ink, which is what it's supposed to show for people with time horizons of 10, 20 years or so. You know who you are. Okay, you can find links to all those down below, as well as subscribe to my Substack. As I said, I'm in Venice right now. We moved to Italy in September of 2023. Not a vote on the election or on U.S. politics or anything other than my wife who's Italian-American, roots in Sicily, a couple generations back, and has always wanted to live in Italy, and we said, if not now, when? So we're here. And it's been a glorious time. We spent some months in Sicily. We're now back in Venice, and we don't know where we're going after that. But hey, it's a fun place. Anyway, so today's topic, we're going to talk about the Fed. And the title would be essentially why the Fed is almost certain to be wrong. This is not a knock on the Fed. It's not a description of some kind of policy failure on their part. It has to do with the difficulty of doing economic forecasting when you're dealing with lags. Now, when I took macroeconomics, we spent, maybe about half the course, at least that's how it seems, talking about lags and how that made economic data, economic forecasting really difficult. So basically the issue is, you announce a policy today, and the question is, how long does it take to get into the real economy and then to show up in the statistics? It happens at different speeds depending on what it is and when it is. And right now we're dealing with a whole lot of lags in the system. So President Donald Trump is out there adding more tariffs day by day. Another big batch today. And I think more is still to come. And those will raise prices. up and down the supply chain, finally impacting consumers. How long that takes, we don't know. And how long that takes really is the key question in terms of trying to figure out when this spikes inflation, when this spikes costs, when this really starts to take a bite out of people's wallets and change economic behavior. So that's one problem the Fed is looking at. When is this all going to take effect? When can they start to think about tariffs raising inflation and therefore need to react? Second thing is that's all happening now, and that's probably going to happen relatively quickly. We'll start to see it in the economy. I think you're starting to see it in the economy already. Companies are raising prices proactively, trying to get ahead of this. So that's one lag problem. The other lag problem is the Trump tax cuts. This is the renewal of the 2017 tax cuts. I think Congress, controlled by Republicans, will indeed do it. Estimated cost is somewhere around $5 trillion over the next 10 years. And the question then is tax cuts are stimulative. I mean, they add stimulus. You're adding money, putting money in people's pockets. You're adding money to the economy. So at some point, that provokes stimulus, which means, hey, we might want to, if we're the Fed, try to make sure that doesn't produce add to more inflation. So we're already thinking about maybe we want to raise rates because the stimulus is a tax cut, is pushing up prices. Maybe on the other hand, the tariffs are going to slow the economy, so we want to lower rates. Which do we do? When do we want to do it? I'm not sure there's a good solution to that, because if the inflationary pressures are not just from the stimulus of the tax cut, but also from the tariffs themselves, sort of an extraneous factor, how do you deal? You can't really do anything about tariff-caused price increases by changing monetary policy. So those are two lags. And then there's the third lag, which is that basically, if you want to look at it, sort of net it out, we're saying, okay, we're going to impose these tariffs, which are essentially a tax increase on the consumer, taking money out of people's pockets. But we're going to put money into people's pockets with a tax cut. And if you look at the numbers, it's pretty clear that in the White House thinking, the benefits, the money coming in from tariffs is going to balance the money going out of the federal budget to tax cuts. These are two things running in tandem. We don't know what the tax cuts are going to look like, so it's very hard to say whether the money coming out of people's pockets is coming out of the same pockets as the tax cuts are going into. It's clear that tariffs are essentially going to operate as a kind of sales tax, which as taxes go is pretty regressive because it's a tax on people who spend most of their income as opposed to saving it. So it's a tax that falls heavily, disproportionately heavy on lower income and middle income consumers. On the other hand, the tax cuts, as they're structured, look like they're going to go, if they're like the last time, they're going to go disproportionately to corporations and to the wealthy. How that balances out and how, wealthy people have been driving the economy lately. A lot of consumer spending is coming from people with a lot of money these days. That's what the statistics from Moody's Analytics say. So how does this all figure out also in terms of lags and Fed policy? Very, very complicated picture. I don't think there's really a way that the Fed stands a chance of getting this right. The question really is, to my mind, is how big a mistake they will make. Because there will be an error, there will be a mistake. It's just too complicated. And the question is whether it's going to be a little mistake, in which case it won't move markets very much, or a big mistake, in which case it'll move the economy and markets. So that's what I'll be watching for as it plays out over the next 6, 9, 12 months. And I'd like to stop thinking about the Fed. It's not terribly interesting to me as a journalist and a stock picker. But I don't think there's any way to avoid it, because right now the Fed remains a key player in the game for investors and for the economy. Thanks for watching. As I said, if you enjoyed this video, go to YouTube and give us a thumbs up. Subscribe to my YouTube channel. That way you get notification when we do our next one. If you want more of my free stuff, you can go to my free site. That's jubakpicks.com. That's 3 portfolios and usually 1 or 2 posts a day, and it's free. You can go to my paid site. That's jubakam.com, which has got 6 portfolios instead of just 3. And you can find addresses to those down below, as well as if you'd like to follow my adventures in Italy, where I've been since 2023, please go to our Substack, also free. It's called We Moved to Italy. You can find a link to that down below as well. Thanks very much for watching.